Hey everyone, welcome back to Corporate Decoder, the place where we can sometimes find that companies are trying to pull a fast one on us with fancy financial jargon. But don't worry, that is what we're here for today. We're diving into a bit of a financial maneuver by COHU Incorporated. Think of it as a company getting ready to play a strategic game with its money, and we've got the playbook right here. Alright, so what is the big news here? COHU Incorporated is announcing a plan to offer a cool $200 million worth of something called Convertible Senior Notes. Now, what does that even mean? Think of it like this: COHU is borrowing money, but with a twist. These aren't just plain old loans. They're reconvertible, meaning that down the line, the people who lent COHU the money might be able to turn that loan into shares of COHU TIBA stock instead of getting their money back. This is usually done to raise funds without immediately diluting existing shareholders too much. These notes are set to mature in 2031, which is quite a long time from now. They being offered in a private sale, meaning they not being sold to just anybody on the street, but to specific big time investors who are considered qualified financial institutions. COHU is also giving the people who are buying these notes the option to buy even more, up to an extra $30 million worth. This tells us they confident about this offering and might need more funds or want to get a good deal on the initial sale. Now here is where it gets really interesting and a bit complex. To manage the potential dilution from those convertible notes, COHU is also entering into something called capped call transactions. Imagine it like an insurance policy on those potential new shares. These agreements are designed to lessen the impact on existing shareholders if a lot of those notes get converted into stock. It is basically a way to smooth out the ride and prevent too much of a shock to the system. These capped call deals also involve other financial players, and their trading activities around COHU's stock could actually influence the stock price itself. This is super important because it means the market for COHU's stock, and these new notes can be quite dynamic and influenced by multiple parties. It is a sophisticated financial dance designed to achieve specific outcomes for the company. Now, like with any company making big financial moves, COHU is carefully stating that many of the things they're saying are forward-looking statements. What that really means is they are looking into the future and making educated guesses about what might happen, like the success of this offering, how much money they'll raise, and how these financial instruments will work. They are essentially saying this is what we expect, but things could change. They're reminding us that the future is uncertain and there are always risks involved in these kinds of deals. This whole announcement is essentially a heads up to the market, letting everyone know about their plans. It is a standard procedure, but it gives us a peek into the company's strategy for managing its finances and its growth. So, what is my take on this? COHU Incorporated seems to be taking a proactive approach to managing its capital and potential dilution. By issuing convertible notes and then hedging that risk with capped call transactions, they're trying to secure funding for what appears to be future growth or strategic initiatives, while also trying to keep their existing shareholders happy. It is a smart, albeit complicated, financial strategy. The main strength here is their attempt to proactively manage dilution. This shows foresight. However, the complexity of these instruments introduces risks. If the stock price moves in unexpected ways, or if the option counterparty's hedging activities cause significant market fluctuations, it could still create challenges. The fact that they are going into these transactions implies they foresee a need for capital, which could be positive for expansion, but also that they are looking to manage the inevitable dilution that comes with convertible debt. The devil is always in the details of these agreements, and their true impact will unfold over time. Alright, that is our breakdown of COHU's latest filing. What is your take on these financial maneuvers, and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community, linked in the description for more discussions. Thanks for watching, see you next time.